Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. CPI, I'm looking at CPI on investing.com here. The forecast is a 3.6%, alright? The previous was 3.2 back on August 10th. It came in lower than expected. We're expecting an increase on CPI. If we look at core CPI, it's weird. Core CPI, the last couple of core CPI has been coming lower than expected as well. But we are expecting it to come in lower at 4.3. The last one was 4.7. We're expecting it to come in lower. That's really interesting how it's core CPI and regular CPI is a little different from each other. But one thing I will say that core CPI, it affects us more than regular CPI. But for some reason, CPI is the headline. That's the one everyone pays most attention to. This is the headline CPI is what a lot of people refer to it. So with that being said, we'll pay more attention to the headline because that's what the majority are going to pay attention to. And we need to pay attention to what the majority is paying attention to because this is likely what's going to invoke some reaction from the price, okay? And what do we do here, Uncle Charles? Uncle Charles' channel, we follow the price action, okay? So to put it quite simple, the forecast is 3.6. We're expecting an increase in CPI and inflation. So, as many of your other fellow YouTubers probably told you, if we come in lower than expected, we'll likely get a bullish response. If we come in higher than expected, and holy moly, we already expected it to come in higher. So if it comes in higher than 3.6, it could get extremely bearish, my friends, nieces and nephew. Okay? So now that we got that out the way, what is the blueprint to trading these day-to-days? Well, a lot of you guys, like Uncle Charles, has probably been trading for a number of years, and you guys will probably already have an idea, okay? But for those who aren't aware or may not have as much experience, something I can say about CPI, especially with FOMC, NFP, a number of day-to-days, is that the initial reaction is usually the fake one, all right? So that's something to watch out for. Watch that initial reaction. Overall, these day-to-days tend to be volatile and they tend to be trappy. The key word is trappy. If we know that a certain trading day is going to be trappy, what trade setup should we be paying most attention to? If you guys said the false breakout or the false breakdown setups, you are correct because those setups are trappy setups. And as sheeps, we trade with the trap. Sometimes we become victims of the trap, but that's why we got to manage our risk well. But most of the time, we do our best to trade with the trap. And we know on the day-to-day, there's going to be some trappy movement. So with that being said, tomorrow, the false breakout setups and the false breakdown setups will be my go-to setups. And in order for us to know when these setups are going to happen, you have to know the levels. Okay? Most of you guys should have my levels already. They're not changed much. Pretty much overall the same. But just in case, I will give you the levels again. Alright? So, today we had a breakdown of 447. That was the 50 daily moving average. Also a fib level. We got a false breakout setup. Potential low or high here. Heading into CPI. Is this a trick? Is this to bait the bears? I don't know. We'll find out tomorrow. But as of right now, it's looking like a false breakout setup. It is a false breakout setup. So because of that, to trigger longs or to be bullish, price needs to get back above 447. All right. If price does not get back above 447, that is not bullish. All right. If it does, we can look to long. All right. If it gaps above 447, which can happen with CPI, then if it's above 447, we know 447 is support, which means the next resistant right up here, this sell zone, 448.5 to the 449 zone. We know that's the next resistance zone. So if it above 447, if it gaps above and it clears 449, that's our trigger to go long, targeting 450 and 452. All right, above 452 would be a breakout of my triangle pattern, and I would be bull bias above 452. All right, does that make sense? Does the bull case make sense? As far as the bear case scenario, it must stay below 447, and if CPI comes in, it could possibly, if CPI comes in not in favor of the bulls, it'll possibly gap down even lower. So important to know the levels. So below 447, I got 445.5. Kind of held today in intraday around here. Kind of held 445.5. I got 444. That's the June high. That was the June high. You guys can see that June high. We broke it down, recaptured, back tested as support. So if 444 is lost, a top is probably in. All right, this could be the top. Monday's price action could have been the top. Below 444, bearish. I do have 442.5 and 444 as support level, but I would favor a third test of this triangle pattern support level around 439.6s. Okay, 439.6 to the 440 zone down there. Okay, so but overall, guys, below 447, I am bearish. Above 447, I would be bullish, but it needs to show follow through and clear 449 and 450 and 452. Below 447, show follow through by breaking down 445.5 and 444, and will likely go test the support of the triangle. Obviously, below that, below 439-ish, bears take control. All right, and we're likely dropping a whole lot lower. I would favor 433. All right, guys, does that make sense? For tomorrow, we got CPI coming in. Watch the news, but be unbiased with the price action. Whatever the price action does, watch the initial reaction. Watch for the fake out, the false breakdown. The false breakout will be the best setups to trade. Above 447 is bullish. Below 447 is bearish. Okay, here is the last CPI. This is August 10th. You guys can see the initial reaction was a big bounce. When we found out CPI came in, inflation came in lower than expected, we had a big initial bounce, and then what happened? I had a 450 level. That's the yellow line. False breakout. It hit my 451.7 level, then false breakout, and it dropped lower. All right, that was the last CPI. So just keep that in mind, guys. All right, so before I end it, because my headache is starting to kill me right now, before I end it, dark pool order 448.4. Similar to yesterday, we had 2 billion in premium. Today's 1.2 billion. 448.4. You can see on the smaller time frame, 30-minute chart, right around there. That's where the selling came in. Boom. Dark pool order stepped up. Boom. What else is worth mentioning? 900 million, not quite 1 billion, but 900 million at the 447 level. That was the 50 DMA. So we know there's liquidity at these levels, okay, guys? Below 447, bearish, but it would need to break above 449. 448.4, you can reference that because it's the dark pool order, but I feel more comfortable 449 because it's the fib level. All right? So I hope that's it for today, guys. As far as the other stocks that I covered, the levels are the same. I encourage you guys to watch yesterday's video if you guys don't have the levels down and the plans on. But the overall the same. I just wanted to cover the SPY and CPI and how to trade it for tomorrow. I hope you found this video helpful. Yeah, that's it for today. I'll try to come up with another video to talk about CPI, and then I'll cover the other stocks. And I'll make sure I'll do my best not to have a migraine or anything like that. Okay, sorry for the short video, but thank you guys for stopping by. Peace.